There was plenty of news about home mortgages this week, including a new proposal in Congress to replace Fannie Mae and Freddie Mac. Joining us is Nick Timraos, who covers housing issues for the Wall Street Journal. Nick, good morning.
Good morning.
Let's start with Fannie and Freddie, because these two companies essentially were the backbone of the mortgage market and have been for years.
Right.
So if they're replaced, I mean, what is the average, homeowner, home buyer? What is it going to mean for them?
Right. That's the $10 trillion question right now, because that's how large the U.S. mortgage market is. Fannie and Freddie back half of all mortgages. And so the challenge for Congress here is to try to come up with a new system, if that's what they want to do, get rid of Fannie and Freddie. Who or what is going to provide credit for half of the U.S. mortgage market? 2/3 of new originations today are made possible through Fannie and Freddie. And I think, a lot of people don't really understand what these two companies do. They don't make loans. They buy them from lenders.
Right.
They package them into securities that are sold to investors, and they guarantee to make those investors whole if borrowers default. And that attracts a bunch of different capital sources to the U.S. mortgage market that otherwise those investors would not be purchasing U.S. mortgages. It makes possible the 30-year fixed-rate mortgage that you can pay off at any time, so you can refinance without a penalty.
Which many countries don't have, by the way.
Which many countries don't have. You can lock in your rate. That's another kind of advantage that we take for granted here. And so if we're going to get rid of Fannie and Freddie, but we want to still have all these things, it's going to require some new system of guaranteeing mortgage bonds or whole mortgage loans.
What about those responsible? The Justice Department just put out a report basically saying the administration is not doing enough to prosecute people who are responsible. How do they, what should be happening at this point?
Right, so there was a report this week saying that the government is saying one thing about its prosecution of mortgage fraud efforts, but that actually the FBI has not made it a priority, that they've dropped a number of investigations, that the number of new investigations is shrinking, and the Justice Department says, well, that's not really fair. Mortgage fraud is on the decline, right? There was a lot of problems during the housing bubble. Lending standards tightened up, so we're not seeing as much mortgage fraud now, and they say it's still a priority. But it was an embarrassing report for the Obama administration because it had a number of facts in it that showed that they had really been overstating the amount of investigations and prosecutions that they've been trying to carry out.
Mortgage rates have been up a little bit. What's your sense quickly of where the housing market is right now?
The housing market is softer than it was a year ago. Mortgage rates went up by a full percentage point last spring, and so we've seen demand kind of cool a little bit because last year we had cheap mortgage rates and lower home prices. Home prices have gone up 10%. Mortgage rates went up a full percentage point. That took a bite out of consumers' buying power. So we've seen a little bit of a pullback in the housing market.
Nick Timraos, thank you so much for joining us this morning.